Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Welcome back, everybody. It's not Phil Tarrant today. Phil Tarrant is away for a couple of days, so I'm standing in. My name's Alex Whitlock. Good to be with you. Just thinking over the last couple of months, really about getting started in property investment. And this was really sort of brought to the fore by my daughter, who's 19 years old. It actually flies in the face of what most people think about young people these days. She's saved up a reasonable amount of money. She's got just over $10,000 and she's very focused on getting ahead. However, you know, it is hard for young people to get started, which brings me round to introducing my next guest. Louisa Sanghera got started in property at a very, very young age. She's worked in banking and finance for a long, long time, and she had some very sound advice from her first employer. So it'd be great to get a bit close to your story. Louisa, great to have you here.
Thank you for having me.
So you've worked in banking and finance. That's what you cut your teeth at a very early age. What took you into banking and finance in the first place?
My father, actually. I wanted to be a hairdresser, but he said he wasn't wasting a good education, and so I had to be an accountant or be a banker. So I thought I'd go into banking for a couple of years, earn a bit of money and travel, and that didn't happen because I ended up being a branch manager at the age of 21, and my career just progressed from there. So yeah, I stuck to banking for 30 years, nearly.
So how old were you when you started working for them? It was for Yorkshire Bank, wasn't it, you started with?
Yeah. So it was 1983, I think. I was 16. Those days, you know, most children left at the age of 16. You didn't start until 18 in those days. So yeah, I was straight in at 16.
Did you start out working as a teller? Your way up?
Yeah, you know, a clerk in the back office, sort of updated past books and all that type of thing, and then on to telling, and yeah, just work your way through, really.
And you bought your first house at an early age. How old were you when you actually made the first transaction?
Yeah, so I was 18. I was actually working for a branch manager who I had a really good relationship with. And he said to me that he was going to put me for various promotions. He thought I'd do well in banking and I could go far. He said, just one word of advice, don't go blowing the money. He said, do something with it. He said, I would suggest that you go and, you know, buy a property, which scared, you know, the hell out of me at the age of 18. It wasn't something I'd thought about at all. You know, the only thing I planned was my next holiday to Ibiza or something. But yeah, I just thought it made sense. And I thought, you know, I did want to have a good time and enjoy, obviously, being a teenager and everything. But I took the advice and went out house hunting.
So what sort of deposit did you have at your disposal back then?
I didn't actually have anything at all. So I had zero deposit and I actually went and borrowed 100%. So I got a 100% mortgage.
Okay. That is taking a leap of faith.
Yeah. That wasn't a staff mortgage either because I didn't qualify. I wasn't old enough for the scheme. You had to be 21 to qualify for the bank scheme. So I just looked at the property and I did a bit of research, and I did speak to a couple of my uncles who were financial advisors, and they'd got properties. And, you know, I saw that there were cycles. And so my take was, I thought, well, if I buy it now, as long as I'm holding on to it for a long time, I should be able to make some money. And I wasn't in a rush because I was so young. So I just dived in. I found a property that I thought was a good buy. It was a couple actually getting divorced and they needed to sell quick. So I jumped straight in there and made an offer. First time buyer, took it off the market.
Wow. And what kind of property were you looking at?
I actually bought a 3-bedroom detached house for my first property.
That's a big investment.
It was.
Yeah.
My uncle said to me, borrow as much as you can over as long as you can, and you won't go far wrong. So I just went for it.
So I'm going to guess that your friends around that time, there weren't going to be many with properties, let alone a 3-bed semi-detached.
No, there weren't. They actually thought they'd either gone to university or they were all out having a really good time. I still had a good time. Interest rates did actually shoot up to 17.5% the year after I bought the property. And that was tough. There wasn't much cash flow, and my cash flow wasn't that great, but I just had to pull back a little bit. They all went off to university. They didn't buy houses. I think I was the only one. I can't remember anybody else buying a house within a couple of years of me purchasing that property. But yeah, interest rates went up, but also house prices shot through the roof.
Yeah.
So I trebled my money in that property. And by the time my friends had all left university, because I was the only one in the group that didn't go on to university, they all left university. And by the time they came to buy, they couldn't afford to buy a property.
It's interesting. Both my kids have chosen not to go to university. My daughter left school also at 16. She's worked hard. She's saved up quite a fair amount of money now. My son also, he left when he was 18 and went straight into work, and he's saved up a significant amount of money. And they're both very focused. I think because they've seen, myself and my wife build up a portfolio of property. They've seen us be very focused on and also very open about the opportunities that arise through good property investment. And I think it's rubbed off on them. It's good to see that they've saved, but it's also they've got that sort of forward vision about building up an asset for the future and being sort of very focused on that. So when you bought this property, did you buy it to live in or did you buy it to rent out as an investment?
No, my manager had said to me, go and buy an investment property, but I was quite keen to move out of home and see what it was like to live on my own.
Yeah,
so I bought it as an owner-occupied property.
So fast forwarding to now, we'll have a little bit of a look at sort of what you've done over the last few years, but sort of fast forwarding to where we are now. You work in finance now, you're a mortgage and finance broker, but you've also built up a pretty impressive property portfolio here in Australia. So you came here in 2005.
Yes.
And you've now got 6 properties. You've got properties spread across 4 states.
Yeah.
So let's look at when you came across to Australia. What brought you over here?
When I met my husband, I'd said to him that I wanted to live in Australia and have a family. And he said, oh, funny enough, that's what I want to do. That was our first date. And by the 3rd date, we were planning on moving to Australia together. It all happened quite quickly. But yeah, we both packed in our jobs, actually. I was working for the bank at a high level. I was sat at board level by that time.
Okay.
And my husband had his own IT business. But I fell pregnant. We came over here with a 9-month-old baby, no jobs, and just thought we'd give it a go, see what we could, make it work.
That's what this country is built on.
Yeah.
And it's a great thing. Also somebody who came over here, I came over in 2001. I think this is a world of absolute opportunity in Australia. I think there is no better place to get ahead if you've got the will and the determination to build something for yourself. I think, it's a fantastic country to live in. And you can do whatever you want here. I think you're taken on face value, and if you work hard and you put the graft in, you can get ahead. So did you get residency straight away, or did you?
No, we came on a 3-year temporary visa, and we had to do our time in the country.
Okay.
So we were sent out to live in Wodonga, Albury Wodonga, right on the border there. I think Wodonga had 30,000 people or something, which was a bit of an eye-opener for me. I'd never lived anywhere like that. But great experience, and I'm glad we did his time there. But we weren't allowed to buy a property when we first arrived because we were temporary residents.
Yeah.
And even when we applied to the Foreign Investment Board at one stage, we were declined. So we didn't buy our first property until probably lived here about 5-6 years and got us permanent residency and everything. And that was in Grovedale in Geelong, which I wish we'd have kept because it's actually shot up there. Yeah, hindsight's a wonderful thing. But yeah, we'd left the properties in the UK at that stage. So we just always thought if we went back, I wouldn't want to live anywhere else. I was living in a beautiful suburb.
Yeah.
And the investments were doing fine. They paid for themselves. So we left those. But then when we moved from Geelong up to Sydney, sadly, house prices had doubled. And I was devastated that I couldn't buy my dream home here. So we had to start again.
So getting a quick snapshot of when you left the UK, so we started off talking about the semi-detached that you bought, when you're 18 years old. How much did you pay for that out of interest when you purchased?
It was a detached and it was £32,500.
Wow.
So that's about $60,000 now, isn't
thereabouts,
it? Yeah, which seemed a lot of money in
1980,
whatever it was. But, I did really well on that property. I was looking to get a detached house, but the investments were only terraced, so we just had like a few terraced houses.
Okay, so you'd got, and did you still have the same detached house and some investment properties in the UK?
No, before I met my husband, I wanted to buy this really nice house. Yeah, it was a massive house in a beautiful area, and to get that, I did have to sell that original house, which was fine. But yeah. So I bought an owner-occupied, and then when I met my partner, we bought an owner-occupied together straight away.
Yeah.
So we only had a couple of investments in the main owner-occupied. And then I also own part of a house in Spain.
When you first came over, did you leave those assets in the UK or did you sell up and come over here?
No, we left them all there just in case. Yeah. But on the move up to Sydney, that's when we decided that we had to sell the properties in the UK, so that we didn't have to have a massive mortgage here. And I'm a mortgage broker, but I actually don't like having a mortgage. So we've got a very tiny mortgage here. So we sold up there, and then we just said we'd start again here. So we bought the owner-occupied, and then we started to buy investments. I just thought I could make more money on investments in Australia than I could in the UK.
So what actually moved you up to Sydney, and what year did you come up here? Okay.
Yeah, it was just work. We always knew that we needed to be in Sydney for my husband's work.
Yeah.
So he works in the banks as a business analyst. So we always knew we needed to be here.
So your first focus, so you'd rented for about sort of 5-6 years down in Victoria.
Yeah, which was very painful.
Yeah.
Been kicked out every 3 months out of one property. We did nine rentals within the first 2 years, I think it was. It was crazy, moving around with little babies.
It's very hard. I mean, we rented for certainly 4 years here before we moved into buying our own property. Having said that, though, and having owned property now for quite some time, when you've got repairs to pay out of your own pocket, and when you've got maintenance and all the other overheads you have to pay as an owner occupier, you kind of look back and sometimes think it was perhaps better off being a renter. And my business partner Phil, who's the usual host of this show, he has been a renter, and he says he always will remain a renter. I think he's very happy renting. So it's horses for courses.
Yeah, I've got clients like that that've got big portfolios. No intentions of owning unoccupied property.
Yeah, Phil's got quite a significant. Phil and I share the SPI portfolio, which is worth circa, it's about 7.5 million-ish between us. And then he's also got his own investment portfolio, which is separate to that. So he's a very solid property investor and believes very strongly in property, but he's happy to keep renting. And that suits his way of life. And, I think he'll continue going that way for some time. So when you moved up to Sydney, you decided you were going to buy. What was the remit in terms of what you were looking for in terms of a property?
Well, it was basically for an owner-occupied. We just had to get near good schools because I got 2 children.
Yeah.
And we had to, my son had a learning of a 15-year-old when he was 5. So we were looking for a certain type of school that could actually educate him, which is a struggle in itself.
Yeah.
And we ended up Upper North Shore.
Okay. And what was your price range? What was dictating what you're going to buy?
We wanted to buy something around the 1 to 1.3 mark.
Okay.
That was like 8-9 years ago.
Yeah. Which would have got you quite a reasonable property in that marketplace back then.
We've got a 5-bedroom, a 1,200 square plot, 5 bedrooms.
Yeah, right.
It's a nice enough house.
And you'd also got, because you'd started buying, because you started purchasing and investing from such an early age, I would imagine that you'd been able to take over quite a solid deposit from the UK. What sort of mortgage did you need to take out when you came over here?
Oh, do you know, I actually... I know I applied to my ex-employer for a mortgage and they wouldn't entertain it because my husband was a contractor, which surprised me. But I had to go and get a mortgage with, I think we had something like 400,000, 500,000 deposit initially.
Okay.
Because we didn't put all this cash. That was just from our owner-occupied that we sold. We didn't put all the cash into the house because we bought a reno. So we needed to have a lot of cash to renovations, which we're still doing 8 years later. There's always something. But yeah, I can't really remember the details of the first mortgage, but it wasn't big, like a very low LVR.
Deposit,
I think we were like at 30 LVR or something ridiculous. Yeah.
Okay.
Wasn't
It's
massive.
quite comfortable, really. It's a nice position to be in. And Louisa, what job were you in when you moved up to Sydney?
So I wasn't working at that stage.
Okay.
So I'd got 2 kids under the age of 5 at that stage.
And this is also, as a sort of a segue, this is where you began your career as a mortgage and finance broker. Mm-hmm. And that was through really your experience of going and sort of searching for a mortgage.
Yeah, that's right. So sadly, because the house prices had doubled in Sydney since the last time we visited, we did have to get a mortgage. So I went and engaged a mortgage broker because although I'd been doing mortgages in the UK, I knew that things were a little bit different here. And I just wanted to get the right advice. So I knew to go and get professional advice from a broker.
Yeah. So at that time, you purchased your home. It was, I'm assuming your husband had gone for the mortgage and you'd been assessed on his,
yes.
Which is why it was difficult with him being a contractor.
Yes.
And then you'd got young kids, so you looked at setting up your own business and sort of moving into the area of mortgage broking. Mm-hmm. So you've now got 6. Is that 6 properties including your own home, or is that 6 investment
including
properties?
My own home.
Okay. So when did you start again looking at the investment market?
I started looking pretty much straight away because I knew we'd got good equity. And as soon as I was earning money, I knew that I wanted to get into investing in Australia. Just, I'd learned about negative gearing here and couldn't quite believe it. So it's like, I just think I just kept saying, everybody should be doing it. Why aren't they all doing it? We need to do this. So I started my research pretty much the time I bought my owner occupied, because there's a lot to it and people forget that. So I just wanted to get my head around how things worked here, look at the markets here, look at the cycles here, learn who are reputable companies to work with here. So I really started doing my research 8 years ago. It took me a couple of years before I bought my first one.
Look, I think there's a fascinating area in terms of research and getting yourself ready to buy. Look, let's have a chat about that just in a couple of seconds. Welcome back with Louisa Sanghera, who has been very successful in terms of building a life, very successful life for herself in the UK, buying at 18. She's moved over to Australia with her young family and moved into property investment after purchasing her first home in the North Shore of Sydney. So you're saying that you'd started looking at the marketplace from an investment perspective around the time you purchased your own home. You'd bought investment properties previously in the UK. And it's interesting, you talk about negative gearing here, and in the UK, there is no negative gearing. It's a very different marketplace. There's no tax relief on investment properties. Typically in the UK, from memory, there tends to be a slightly higher yield depending on where you buy, whereas here, there's maybe a slightly lower yield in some areas. Yeah,
I think it's difficult to remember. There's so much happened since I had those properties, but I think it was a higher yield. Yeah, I can't really remember what the figures were, to be honest.
But then you look at negative gearing, and whereas you wouldn't deliberately look to lose money on a property for saving, spending $2 to save $1, it does make a big difference as an investor, particularly if you're looking to build a portfolio. And, when you're looking at good upside in terms of capital growth, it does mean that it makes investing here more attractive. So you started doing your research. What were the things you learned about the Australian market compared to the UK market in terms of investment strategies?
Well, first of all, I wanted to learn about the different cities, because I didn't know anything about Brisbane, didn't know anything about Adelaide. So I wanted to look at the cities. I wanted to look at what sort of property they got in there. I wanted to look at historic information on how property had performed in those cities, because I needed to decide where I was going to start. So I did that sort of research. But then, being an investor from the UK, I knew it was important to build a team around me.
Right.
So I actually went out to find the right team. So that included me getting a really good financial planner on board to work with us to grow his wealth, and doing retirement planning and all the rest of it, but also that would be happily involved in my portfolio growth. I knew of buyer's agents here, which is something else that we didn't have in the UK. So I had to go and find all the properties on my own in the UK. And when I learned about buyer's agents here, I just thought that was great. So I thought, I've got to go and find myself a good buyer's agent and work with them. They might as well help me. I don't need to do all this on my own. And then I looked at how the buyer's agents did the research, what sort of companies they use, how did they do the research. But yeah, and I got a great accountant. He's got 53 properties himself. So he's a great accountant to have on board. So I built my team. I did as much research as I could. I read everything. I attended every seminar. And then I felt I was ready to go once I'd got the right team on board.
That's really shrewd. I think having the right team around you, particularly, a really solid buyer's agent, and myself and Phil, have used a buyer's agent for every purchase that we've made. And there's properties that I've found myself, and I've still referred to my buyer's agent because they will look that bit deeper into the property. And I might look at a property and go, yeah, look, it looks like it's a good price and it's a good location. And I know enough about property to know that it ticks all the boxes for me. But the buyer's agent will go that much further into it and make sure that they give me the confidence that I'm making a good purchase.
That's me. You get to know, don't you? After so many years in investing in finance, you know what you're looking for, but it's always a risk.
It is.
It's always a risk. Guarantees here when you're investing. So it's just nice to have that second opinion. So I've thrown properties in front of the buyer's agents and gone, what do you think to this? And then I've thought it's been good, and then they've come back and they've gone, well, it's good, but I think we can do a little bit better.
Yeah. One of the good things that with the property that I'd found myself, the buyer's agent set the price that they would make as a maximum, and it was lower than what I would have paid myself. Absolutely. So even though I found the property in the last purchase, they saved me probably about $50,000 on the purchase price, because I just would have gone higher because I looked at the sales history and I thought, it sold for X amount in 2016, so therefore it's probably worth Y amount now. And they put in the starting offers significantly low, and I thought there's no way that the vendor will even entertain those bids anyway. That's one of the big values of a buyer's agent, is not just researching the market, but it's about understanding what the value of the property is.
Absolutely, you're spot on. We encourage all our clients to use buyer's agents for that reason, and also the fact that they do get the off-the-market properties to look at. So, they're getting first pick of what's coming on the market before it even hits realestate.com. So we love buyer's agents, and I encourage people to use them for that reason. I mean, especially in Sydney at the minute, the investors that are buying in Sydney, there's such a lack of stock here. Yeah. We just see people go to auction. Our clients are going to auctions every weekend, and houses are just going hundreds of thousands over. We had one in Mossman went $1 million over a few weeks back. It's just crazy. But a buyer's agent would stop them from overpaying for a property. So
auction clearance rates this week, Sydney, there was about, I believe there's just over 1,000 properties went to auction in Sydney. Clearance rate at the moment, this was as of Sunday from CoreLogic, of 78%. So the market is hot here right now. That'll get adjusted down a little bit, as time goes on. But it's already quite a hot market in certain areas.
Yeah.
So you've got your team assembled. You've got a fantastic accountant. You've got your buyer's agent. So where did you focus your search for that first investment property?
So I decided to go into Brisbane.
Okay.
That was, my research was sort of saying Brisbane. That was, 6 years ago?
Yeah, okay.
So I thought Brisbane at that time, and I did go apartment at that time. I knew there was a lot of apartments being built, and I knew there was going to be an oversupply of apartments, but that didn't bother me because I've bought that apartment to hold. It's a buy and hold for me. It's in a suburb called Wollongabba.
Okay.
The value did come down slightly on that property after I purchased it, but I knew that was going to happen. But what I also know is that the new rail line is going in there, and that's going to be the last stop into Brisbane. So being on that last stop into Brisbane, I think is going to really increase the value of that apartment. So
how did you identify that as an investment location? Was that a recommendation from your buyer's agent, or did you pick that suburb and you look for advice from the people around you?
For that one, actually, it was a company. So being a mortgage broker, you get to know other investment companies who work with clients, and that was an investment company I came across that was looking after a client, and they only do off the plan. I do some off the plan, I do a bit of everything, but I liked this guy. He's been doing this for donkey's years, and he actually told me about that. He was purchasing it himself, and he mentioned it to me. And I had a look at it and really liked it myself. So
what kind of apartment block? Give us a bit of an idea of, was it sort of a high rise? Was it low rise?
No, I don't like, personally, I go for small developments if I'm doing apartments. Okay. So, sort of 50, I think it's got 52 in this one. This one is a bit of a flash one for me because normally I don't go for all the flash pools, private dining rooms and everything. So this one is a bit flash. It's got everything. But it's the side, I always visualise what client I want.
Yes.
And for me, that fitted my client, my tenant.
Yes.
That fitted my tenant. So strata's a little bit high, but when I think what I can make on that, over the next 10, 15 years, for me, it was worth it.
This is where negative gearing comes in. And I've bought off the plan, and the yield has been low because of the strata fees and so forth. I bought in South Bank first off, and I did get hit hard in terms of cash flow. I was paying out a lot of money in terms of, there's a big gap for the mortgage, but the capital growth for that apartment was significant. So it's swings and roundabouts. I did make the money in terms of capital growth, but it was, the holding costs were quite high.
Yeah. I mean, everybody has a different strategy. Some people come to me and they just want the rent. They're not so bothered about the capital growth. I've never looked at it like that. I always go for capital growth every time. To me, I'm not so bothered about, I can cover the instalments, And that one actually, even though it is flash and it's got, the spa and the gym and the pool and everything, it's actually not costing me that much.
So how many bedrooms was the apartment?
Just one bed.
Oh, one bed.
One bed ground floor.
One bed ground floor.
Yeah. It's got courtyard and everything. It's great for like somebody wanting to work from home or interview from home, that type of person. I've actually had doctors, and I had a pilot in first of all, And then I've had doctors and nurses in since.
And what was the purchase price on that?
I think that was $435 at the time.
And so you put a deposit down. Was it a 10% deposit?
Yes.
And then sort of 18 months?
And it was 18 months for it to be finished.
Yeah.
And the rent on that, I think, is $445.
That's not bad at all.
No.
And you're still holding that now? Mm-hmm. What would you say the value of it is now? How much would you say it's gone up?
I don't think it has gone up yet.
Okay.
Because it's on. I think it's probably holding its own right now. I think it did come down, and I think it's holding its own right now. Soon as that train line goes in, and the new bus terminal's going to go in there as well, then the price will start to shoot up in that area.
When's that scheduled for completion?
In the next 2 years.
Okay, because then you'll already see prices start to go up as that nears completion. So
yeah, there was just such an oversupply, which I knew that was coming. If you go there and look, it's just apartment block after apartment block. So I mean, the quality apartment I got we've managed to keep the rent. We've not had to reduce it, even though there's been a lot of oversupply, and it's always been tenanted because I went for quality, which is it's a standout building, an ARIA building. They're Australia's number one developer actually the last couple of years.
Yeah.
So the ARIA boys have done me proud.
Yeah, no, the population is growing. There's strong migration going up to Queensland. We'll have a quick chat about the other properties you've bought in just a couple of seconds. Welcome back. Catching up with Louisa Sanghera. She's a successful investor, also a finance broker, has built a life over here in Australia. She's just giving us a run through of the properties that she's bought. So, Louisa, we were just talking about the one-bedder that you bought just outside Brizzy. So you've got another 4 investment properties. Just want to quickly run us through what they are, where they are, and when you bought them.
Okay, so I've gone sort of one every 18 months type thing. And we decided to spread as risk. So I didn't want to buy in one state. I think Brisbane's great, and I've got a couple in Brisbane. So I've also got a house in Brisbane. So I went for house and land.
Yep.
So when I'm buying, I'm buying a spread of different type of properties, some house and land, some units. The next one's going to be a dual key that I want to go and buy.
Okay.
And then I decided to buy in different cities. So we bought in Perth, Melbourne, Brisbane. I've only just purchased in Perth, and that has been off the plan. And the off the plan's actually been delayed over there, which I wasn't too concerned about again, because I was watching the cycle. And I think, that's just going to be finished in April, May. And the market over there is just starting to take off. So I think my timing's quite good. I'm hoping it is. So
when did you put down the deposit on the
That was a couple of years ago now.
Okay.
Yeah.
Were you a bit nervous at the time, or did the indications tell you that because it was a tough market then, it has been for a while over there? What sort of prompted you to take that leap of faith?
I think Perth, I've seen Perth side, it is a bit more risky for me, I feel. I felt a bit more nervous just because, you can see you saw what's happened the last 10 years with Perth. The house prices shot up ridiculously and then went straight back down rock bottom. So, and people talk about Perth being about the mining and everything. It isn't. There's a lot more to Perth than the mining. But I do feel it's a little bit more risky for me. But the reason I liked this particular development was that Match are building it. And again, they're WA's number one developer. They've won awards. And it's in a suburb called Como, which is like the Mossman of Sydney. It's all old money, old school. It's just like, old money. It's like old houses. There's no development there at all.
Yep.
And the Match, the developer, it took him 6 years to get approval for this very small development. And it's nothing flash at all. It's just basic apartments. It's just made for owner-occupied. So for me, and I've got city views, river views. So for me, I just thought that's an owner-occupied property. I thought I'd take the risk with that one.
So you've got your 5-bedroom place of residence. You've got 5 investment properties. Have you sold anything since have you just continued to add to your portfolio?
Not sold anything yet.
Okay. And do you have any plans to sell anything?
No. Because I've not been doing it that long, really. It's like, for me, when you go into investing, it's a 10-year plan with all of mine, because I'm buying city. I'm not buying city centre because I don't like city centre for me personally. I think that's more risky. So I sort of go that tier 2 out of cities and, you've got to sit and ride the circles out. I think I'm not a hot spotter. I'm not somebody that wants to go into some random town in the middle of the country and take a risk. That isn't me. But I think though, if you go into the sort of second and third tier circles, after the city centres, I think they perform time and time again. You've just got to ride out the circles. So
looking to the long term, what are your personal goals with the wealth that you build through your portfolio?
So look, we're pretty comfortable for his retirement ourselves, but just for me, it's about my children. So I said I haven't come all this way to live in Australia for my kids not to be able to afford a house in Sydney and go and live in Whoop Whoop away from us. I want to enjoy seeing my kids. I want to be there for my grandkids. So I want to help my two children get a property in Sydney. So we're getting these investments. We've told them they're theirs. So we said, they're yours. Whatever we make on these, we're going to split it between the two of you and you'll have that as deposit for a house. So, so it's for the kids.
Louisa, how old are your children now?
15 and 13.
Okay. And what kind of conversations do you have in the family household about money, about investments, about property, about wealth?
My kids are quite interested because, they're into it all. They understand everything, They are both intelligent children. They're getting good education and everything, but we do a lot of education at home on property and investing. So my son is 15. I say he's got 8,500 saved so far towards his first property. He wants to get a property as early as possible. So, and he's quite happy. He's already talking. He's going to borrow 95 LVR if he can on an investment. I keep saying, no, well, it's currently only 90. And so he was a bit, oh gosh, I've got to save even more. But he's so focused on buying something. He'd like to buy to live in it.
Yeah.
But he said if he can't, he'll get an investment and he'll build through buying investments to buy his first owner occupied. And my daughter's exactly the same. They're seeing what we're doing and they're seeing, we talk to them about the numbers and they get the numbers now. They're old enough to. So, and I've showed them what I've done historically, so that they're great little investors. I'm sure they'll do well.
So going back to when you were young and you started work at 16, you went out there and you went and worked in the bank. What kind of relationship did you have with your parents in terms of finance? Did your mum and dad talk about what they earned, about what they got saved?
No, nothing. My dad was an electrician and my mum didn't work. They lived in a nice detached house, but they weren't. They didn't have money. They never had aspirations to invest, or it just wasn't my parents. They're just very working class, down to earth people. Pretty basic.
Yeah, my parents, my mum was a teacher and my dad worked at Rolls-Royce in engineering. He was an engineer there, and it was, I'm 52 years old now, so I grew up. I was born in 1967, so my parents are born of an era where they didn't talk about money. It was a taboo subject. It was not even something that wasn't spoke about. They would shut you up pretty quickly if you wanted to hear about sort of income, which I think is difficult when you're trying to form your own ideas and your own opinions about how to get ahead. So I'm very open with my kids about about money, how it goes, how you manage money, how you invest in assets, whether it's shares or whether it's property, and also really about sort of what your goals and aspirations are, so you get some sort of sense of proportion about where you're going. Mm-hmm. So, and that's unique to every individual person, what their own personal goals are. I want to be comfortable, and I've got a good measure of where I want to be, and I just share that very openly with my kids. I think it's very healthy.
Yeah, I'm very open with my kids, and we're gonna actually do some education around that. So from possibly January, we're going to be holding some workshops, just sort of talking to kids about cash flow and saving money and how they can get into property. And that's something we're actually working on as a business right now. Because, if we can get the kids started early. I love it when teenagers phone me up or, 19, 20, 21 year olds talking about property. That excites me.
Yeah.
I'll give them all the time in the world if they want to start talking property at that age. It's fantastic.
So now this is just quickly, just in rounding off, you've got, you have your own finance broking business. You went to becoming a mortgage broker because when you bought your place in Turramurra, you had a very good mortgage broker who helped you, and you were with your kids at the time being and looking for something to do. So you moved into mortgage broking. Zippy Finance is your business. Mm-hmm. So just as a finance broker right now, how difficult is it at the moment to borrow money, particularly say for young people looking to get in their first place? We know that property prices the market's getting a bit tighter, but in terms of getting purchase ready, how hard is it for young people to get their finances in order?
Oh, look, I'm not going to lie and say it is tough. It is tough for them. It's especially in Sydney, because they need a big deposit here to get into the market. On top of that, they've got stamp duty. There is stamp duty concession, but that's only up to 850, and very few people can get anything for 850 in Sydney. So it is tough, but I say to them, I try and encourage through our marketing and everything for people to come to us early. I would much sooner them come to me with nothing and us put a plan in place and us work together to get that deposit saved in 2, 3, 4, 5 years, then somebody come to me, last minute and say they've purchased a property and can they get a mortgage? So I love it when they come early, and we'll work with them to achieve what they need to achieve. They're best to be informed, early. So especially around things like living expenses, if we can educate them and say, this is what you're going to need to do to get a mortgage, every coffee you buy, every lunch that you buy, it's all being recorded. Yep. So pack your sandwich, take a flask. So if we can educate them and help them get on, into that first property quicker, that's great. But I just say come early. Let's make a plan, work together.
So for investors, and this is speaking to you both as a finance broker and also as an investor, interest only or P&I? What's your approach to investment properties?
I'm interest only for the negative gearing. If somebody comes to me for, we've got more and more people coming for an investment, the first investment, when they don't own an owner occupied. So it might be in that case that they would go P&I on that first one. But we can't give, I always send them off to their accountant. As soon as anybody comes to me for investment, I send them to speak to the accountant first away, get the right advice, and then come back to us. But majority, we have got a big portfolio of investors. So because I talk on the circuits about to investors, but most of them are interest only.
And also just, in terms of getting yourself ready to purchase, how important would you say getting pre-approval is if you're going out there, whether you're an experienced investor or a first-time investor?
With anything, you need to get your pre-approval up front. You need to know, people think they know the numbers. They're often quite surprised when they actually see the numbers and what they can borrow these days. So I think come early, get your pre-approval, then go and find the property. There's nothing worse than not getting your pre-approval and then finding the property you want and having to rush around, like a headless chicken trying to get your finance in order, especially at the moment because we've got massive delays in the banks at the minute. It's taking weeks to get some approvals, and some lenders aren't even doing approvals at the minute, or pre-approvals, but it is tough. Yeah. And
so for yourself and your husband, any more planned investments on the horizon?
Yes, there is. We are both self-employed, so we're working on our living expenses at the moment, and my husband is going to have to go PAYG for us to move our portfolio further, to be honest, or Zippy's got to double its business in the next 12 months, one of the two. But obviously, wherever we can do, we're going to be buying property. Our next one, we can see what we're fancying doing a dual key, and we will do one in self-managed super fund. Not much choice for a self-managed super fund on the lending side, but it's still there. So I think we should do that sooner rather than later, to be honest.
Louisa, it's been fantastic talking to you. Very grateful for your candid sharing your journey as an investor, as a young person getting in the property market, your philosophy at home with your kids. I think it's so important to give young people an indication of how easy it is to get into the market with a strategy, to be very transparent about how you've got ahead yourself. So thank you very much for that.
You're welcome.
For everyone else tuning in, really appreciate your company. It's been great to have you here. Look, I'm sorry Phil couldn't join you today, but he will be back again next week. Don't forget to check out all the other podcasts. They are all there on smartpropertyinvestment.com.au. I'm your host, Alex Whitlock. Thanks very much for joining.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.